Excellent. I'm Jason Huck with HSBC. We opened up an office in January 2017 here in Denver to cover the Mountain State region. I'm not sure how much or how knowledgeable you are of HSBC, but HSBC stands for the Hong Kong Shanghai Bank Corporation, and I had the pleasure of working both in Shanghai and Hong Kong. And I'm going to introduce my esteemed colleague, Debra Lodge, who's going to focus the discussion on the RMB, something that I spent 4 years dealing with during my days of subsidiary banking, helping the multinational business in Asia Pacific. So without further ado, Debra is a managing director and head of corporate solutions for HSBC based out of New York. She's creating and finding tailored solutions for multinationals in the US, as well as finding Chinese companies, solutions for Chinese companies who are doing business in the Americas. So what we call the inbound and the outbound flows. I had the pleasure of meeting Debra for the first time in 2012 when I was in China, and so I'm very pleased to introduce her. Without further ado, Debra Lodge from HSBC.
This should be on by now. Okay. Wow, this is a big room. I didn't expect this, and I can't even hide behind a podium. So first of all, hey, thanks everyone for coming in on this session. It's always hard when it's just before lunch, because quite frankly, if you were here at 7:30 for your breakfast, you've probably had enough by now. So I'm hoping I'm going to make this pretty lively, but not interactive. I've no bananas, and I don't have a pineapple. So that's kind of not my kind of presentation. I want this to be educational, and I hope that some of you have come to see this because you're a little bit inquisitive. And it's always great to be inquisitive. What is this? What is the Chinese currency? Why should we be using it? And more importantly, you know, why should we not be using the US dollar anymore? So what I'm trying to get over is in these turbulent times, and I just checked my Twitter feed and there's nothing else from the president on this. You know, what else should we be thinking of if you're an importer or an exporter? And quite frankly, I talk about the Chinese currency, but this could be the same theory and philosophy for any international country that you are dealing with. Yes, the US dollar is the world trade currency and has been for a long time, but I think we are going to start seeing, and I am already seeing, some vast changes with the use of currency in relation to payment of goods or, you know, actually selling goods in other countries. So what I want to achieve today is just to give you a little bit of an understanding about what the currency is. I'm very happy to take any questions if anybody wants more clarity, or I'm around all day if anyone wants a side chat. So what I'm going to start with here is, we hear so many different things about the Chinese currency. Is it renminbi? Is it CNH? Is it CNY? Is it yuan? What does all of this mean? It's way too difficult. I'm shutting my mind off and I'm going back to the US dollar. So let's do a little bit of exploration around CNH, CNY. We call the Chinese currency renminbi as a generic term. So as you can tell, even though I live in New York, I'm not actually from New York, although I am a US citizen now. And it's like when we talk about the British pound, you sometimes hear people referring to it as sterling. Okay, so when we talk about renminbi, it's kind of the same thing. It's just a generic term that we generally use for the currency. So when you look at CNY, what is the CNY market? Let me start by saying anyone that deals with SWIFT payments or international payments, there is only one currency code for the Chinese currency, and that is CNY. So anyone that was doing a payment wire into China, you would use the currency code CNY. And this is where it kind of gets a little bit complex. But what the CNY market is it is renminbi in China onshore, okay? It's onshore in China. And to make things a little clearer, for onshore, offshore, Hong Kong is considered an offshore market, All right, it's not considered mainland China, even though I know we do have the one China, two systems with China, Hong Kong. So CNY market, it's controlled, okay? We do have certain flexibility with the FX rate. Let me talk a little bit about that. 9:15 every morning, the PBOC, that's the People's Bank of China, the central bank, announced the daily fix. The daily fix is the spot rate of the day, okay? How is that calculated? Well, you have 14 banks giving their estimation of where they think the daily start rate should be. In very much the same way as LIBOR, although me mentioning LIBOR, people will go, don't talk about that because it was so bad in the past, so I'll scratch that one. But it's generally the same concept, 14 banks, 14 major market makers, of which HSBC in Shanghai is one of them. So you're kind of thinking, well, this is easy, this is transparent. Unfortunately, this is onshore China, and sometimes it doesn't correlate to where the banks think the rate should be. So the PBOC decides this is the starting rate of the day, and the US dollar is allowed to trade against the renminbi using that beginning rate, and it can trade 2% above or 2% below. So that is the market. So when you hear people saying, oh, you know, dollar renminbi, dollar Chinese currency, it's a fixed market. It's not a fixed market. Let's just call it a floating fixed market, because you have a start rate and you have a 2% above, 2% below, 4% band, which in the FX world is pretty wide. So think about the onshore CNY market as being a lot more controlled than the offshore market. So what is the offshore market all about? It's called CNH. Why? Because to begin with, the first pool of liquidity was in Hong Kong, okay? Now, if I hold a 100 renminbi note in China and I hold that note in Hong Kong, it is exactly the same, okay? It's exactly the same currency. So what CNY and CNH actually tells you is, where am I holding the currency? If you're holding it onshore, it's CNY. If you're holding it offshore, it's CNH. Think of CNH as a US dollar, a euro, a Japanese yen. I was going to say British pound, but with all the Brexit, I'm a little bit embarrassed to mention the British pound. So it is a 24-hour market, super liquid, even in this time zone. So people that say to me, yeah, but Deborah, if I'm doing this currency, I should be doing it in Hong Kong. If you'd have said that to me 4 years ago, I'd have gone, you have a good point there. It's no longer like that, okay? We have the liquidity in the market. So CNH is market-driven. It's market-driven by supply and demand. However, of course it's going to correlate in some way to the onshore CNY market. Now, when these two markets go away from each other, this is when we have what's called basis risk, okay? But I don't want anyone to get hung up about this basis risk, because if you, let's say as an example, as an importer, okay, have to pay 1 million renminbi into China, this is how it would work. You buy in the CNH market, you sell the bank your US dollars, and they give you CNH. You then pay that 1 million CNH into China. You make the payment into China. And anything to do with payments, it's 1 for 1. So it starts off as 1 million CNH. As it crosses the border, it goes into an onshore account and turns into 1 million CNY. So can you see why I'm saying don't get hung up between a basis risk between the two of them? Because in terms of payments, it's absolutely 1 for 1. And I know a lot of people get mixed up on that. And believe you me, up to 9 months ago, I'd been sat on a trading room floor for 29 years. And the number of people I had coming up, even the traders, tell me, what do I have to do about converting CNH to CNY? It's like, no, guys, that's kind of not how it works. So I know that's a very confusing part of this currency. So that's a little bit about the currency and the drivers there. So let's get on to what am I allowed to do with this currency? Again, because in the past, people have always used the US dollar. I think the tipping point with China was July 2013, which actually is quite a while ago now. And the PBOC and SAFE is State Administration of Foreign Exchange, decided as part of their opening up of the markets, they wanted foreign companies and local companies to use the local currency. What is the end game with China as far as the currency is concerned? Well, some of you may or may not know the Chinese currency is actually in the IMF SDR basket. So for all intents and purposes, it's moving towards being a reserve currency. Again, guys, we have a long way to go on this, but it's the first step of the renminbi being a reserve currency. So, of course, China wants companies to use its own currency. So what they said in 2013 is, okay, for anything to do with goods and services, goods, tangible, things that move, services, an audit, an accountancy firm, anything to do with services, you can move renminbi in and out of China, okay, backed up by invoices. And again, anyone that says you can't get paid for services that have been done in China by your China sub and they owe you money, come and speak to me, because that's absolutely not true, but I do hear it a lot. So anything to do with goods and services, anything to do with intercompany payables. You have a manufacturer in China, they manufacture the goods and sell them to you in the US. You can now pay for those goods in renminbi rather than US dollars. Anything to do with investment, right? Setting up a company in China. You don't have to put in US dollars anymore. You can use local currency, and actually, there's some really good reasons why you should. So anything to do with the capital account, anything to do with goods and services, that's what this new rule in 2013 allowed you to do. So let me pull this all together and why I want to speak to you about this. If you think about what's happening at the moment and the trade rhetoric and the trade talk, and I'm not really going to go that deeply into that because there's a lot of other people talking about this today, but one of the things that has happened because of this is volatility in the currency. And the renminbi is depreciating again. So by that I mean, if you look at the dollar renminbi exchange rate, this morning we got up to 685, which we haven't seen those levels for quite a while. What does that mean to you guys? If you are purchasing goods from China in US dollars, every time you send a US dollar into China, your supplier is exchanging it for more renminbi than he could a month ago or a week ago. Not only that, if you pay in US dollars, you are paying your supplier a spread. Why are you paying a spread on your price? Because the supplier is managing the FX risk. And anyone that manages risk has a right to charge you for it, quite frankly. So, my idea here is, and something we've been speaking to clients about for quite a while, is why not take responsibility of that risk yourself and ask to pay for your goods in renminbi? And by doing that, you save your spread because you're managing the FX risk, but also you can take advantage of the forward market, and I'll go into that on the next slide. So basically, by using renminbi, there are a number of good reasons why you should do this, and some of them are on the screen there. But also, you might open yourself up to companies that are not allowed to receive US dollars, because companies that are dealing in the FX market actually need an FX license in China. So again, it might just open up some new opportunity for you if you will take that local currency. So there's an illustration here of how switching to renminbi could save you some money. And I'm going to talk through a case afterwards to put this into reality. And what this spreadsheet shows you here, it's two different dates in time. And it's saying, I'm a company that spends $25 million a month in China. Now, again, it depends on the seasonality of your company, how we would look at this as a bank, but this is just a straight line example. And what it's saying here is, because there are positive points in the forward market. So you as an importer say, okay, this month I need 25 million, in 2 months I need 25 million, in 3 months I need 25 million, but I'm gonna lock in today. Okay, I'm going to do those FX forward contracts today, take advantage of the forward points, which means for my US dollar, I am getting more RMB. Okay, I'm not letting the supplier get the more RMB, I'm actually doing it myself. So 2 examples here. What we said August 21st last year was, for this company here, and this was a real example, it was a company that was spending $300 million a year on imports from China. If they decided at that point in time to pay in local currency and not US dollars and hedge out in the market, they were going to save themselves $1.5 million. Well, I don't know a company on this earth that wouldn't want to save $1.5 million. Okay? Now, because of volatility in the market, I ran this again on April the 1st, and the very same scenario here, because of the FX volatility, just came down to $500,000. Again, you know, not to be laughed at. But if I ran this scenario again, I know that the spot rate has bounced up. I know that the 1-month points are really positive today. So I think we'd probably be around the $1 million savings. So you can see those clients, those companies that are not thinking about how can I take advantage of this, the rhetoric, all of the volatility in the rates, they potentially could be losing out on savings. So I had a client in Long Island. They are the biggest manufacturer and seller of costumes. So when you do your Halloween costumes here, which I find very funny because we never grew up with anything like that, chances are they make your costume, all right? And to begin with, they had purchases of around $250 million. Now the company's grown so much that they are purchasing $450 million worth a year from China. And by the way, they are not going to change anything of what they do. They're still going to manufacture in China. And on their bottom line, when we introduced this to them, they worked out that they saved 4%. And that's a huge savings for a company like that. So whilst we could never guarantee everybody saves in every scenario, it's very easy to run scenarios like this and show you by using that currency how you as a company could take advantage of this volatility. Themes and solutions. What do I talk about day in, day out? And I will share with you, up to 2 months ago, I was commercial banking's China expert. Okay, so my whole life was China, and I had a panic this morning because things are moving so quickly, I can't keep up with the media and I can't keep up with the research. And but 2 months ago, I was asked to take on more corridors. So now I'm looking at the whole of Asia Pacific, including India, the Middle East, et cetera, and Europe. So I have an expanded role. But I will say, themes that I talk about again and again is usage of local currency in many scenarios, but also how to get your excess cash out of China. And again, anybody here that's been told that's impossible, I will say to you, it's not impossible. And come and see me afterwards if you want that conversation. So that's just to give you an idea of some of the corporate themes that are talked about in relation to using this local currency. So we get on to not my favorite subject, the trade wars themselves. And I know this is very busy, but as I said, I cannot keep up with the amount of information that's coming out. So what I did on Friday evening, last thing, was I picked out the new forecasts from our economists, and again, how this is going to make it realistic to you guys about what's happening with this currency and the impact. So I think what we're going to do is we're going to start on the bottom line. And what the economists have said is, okay, looking at all the rhetoric, what's going to happen with the FX rate? Despite all the words, that's all that this is saying. Looking at the rhetoric, what's going to happen? We all thought 3 weeks ago we were going to be in scenario 2, a partial deal. Everyone would come around happy, and you'd be looking at, you know, that 665 level, all right? But now we're kind of going more towards scenario 4. And in fact, we are at scenario 4, which is a no deal. So look at that. We're thinking if we end up with scenario 4, the FX rate could actually go up to 7.25. Let's put that into perspective. You send $1 into China, and your supplier is getting 7 RMB 25 for that dollar. They're onto a good thing there. So that is just explaining what could happen with the trade rhetoric. And because of that, we have changed our forecasts from 670 and 675 to second quarter and third quarter to 695. So we're expecting a lot of volatility over the last 3 months. What does that mean to you guys? If you have goods to buy from China, go in the market and buy whilst the rate is high. You know, again, there's always an opportunity to take advantage. And this works for exporters as well. You know, we can see towards the end of the year that our forecast is the rate's going to go down. Is that a good time for you guys to think about taking renminbi for the goods that you sell to China? So it's quite a conversation, but it works for importers and exporters. So this last slide, oh, and I'm out of time, so I'll make this very quick, is I wanted to show, because of the rhetoric, where possibly people could be going for some of the supplies that have the trade tariffs on them, okay? And certainly the likes of Indonesia, Malaysia, Philippines, Thailand, and Vietnam, they already manufacture quite a chunk of what we are importing from China. So I think we're going to see two things, quite frankly. I think companies that already have large production lines in China, because of the cost, because of the infrastructure, because of the good product, highly likely at this moment in time there will be a mass exodus out of China. That's what we at HSBC think. However, what I am seeing is, especially importers and exporters, they're looking at these different countries because these countries, number one, have touch points on the goods, and also, for example, Vietnam, the Chinese factory owners set up exactly the same factories in Vietnam 5 years ago. So they were ahead of the curve, to be quite honest. So I think just to pull all this together, even though it looks as though we're in bleak times, there is tremendous opportunity to look at your business, look at the currency you're using. Is there somewhere where you can get cost savings? And we certainly, and the group in Denver at HSBC, can have a good conversation around this with you. Or if not, if you're thinking, well, I'm paying so much tariffs, this is not viable for me anymore. Again, have a talk with us about what your product is. We'll talk with our colleagues all over Asia and say, okay, who do you have that makes this product? Who do you have that's making tires? Who do you have that's making that, you know, bedroom furniture? And that is what we're all about, and that's why HSBC is in Denver. So with that, it is lunchtime. I hope this has given you a little bit of education. And thank you for being here and not looking at your phones. It's been brilliant.
with the love and kindness, strength and courage of King Ram.